Apportionment Module 2. Module 2, the apportionment form. In this module, we're going to cover the apportionment form itself, the standard form 132, its structure, and its composition. Keep in mind that this form is actually just a big Excel spreadsheet, something all budget types are familiar with. This is a portion of Exhibit 120A in OMB Circular A11, representing the SF-132 or apportionment form. Virtually all requests begin with this form, which is created using OMB's web-based apportionment system. The SF-132 form has a maximum of over 130 lines in order to account for many variations of funding and applications of funding across the federal government. Most accounts use fewer lines, and the apportionment form submitted to OMB reflects only those lines with amounts on them. Let me first point out a few general statements about the form. Recall from Module 1 that Section 120.57 in Circular A11 says that you cannot incur obligations in any year absent an approved apportionment for that year. So note, the first thing you see in the header of the SF-132 is the fiscal year the apportionment is for. Whether the account is receiving new funding or carryover from a prior year, you must always have a current year apportionment to obligate funds in the current year. Just under the FY identification is the phrase funds provided by public law, and it's followed by a bunch of X's. Here, OMB is asking you to identify which public law or laws provided the budget authority being requested to be apportioned. Normally, you would simply enter the public law reference, or you may have two public laws. If there are multiple public laws providing the resources, you may use a descriptive reference like funds provided by public law NA, obligated balances and offsetting collections. The important thing to remember is that you should enter something to replace the X's in order to avoid a problem validating your apportionment. The next thing I want to point out is the first 6 columns titled Treasury Agency through Allocation Subaccount. While each apportionment form has to have this Treasury account information on each line of the form, as the exhibit indicates, the apportionment system hides these columns when you validate a file. The important thing to remember is that if you add rows, you must update these columns. This work is done automatically for you when you generate the form from the OMB system. So let me stop for a moment to make a recommendation. Do not create apportionments by editing existing files. Always use the OMB apportionment system to create apportionments and reapportionments. Since these columns are hidden after the form is created, our subsequent examples will not reflect them. At the top of the form, in the Bureau/Account Title/CATB Stub/Line Split column, is the account identification. This information is automatically generated upon file validation and must match the TAF's information in the hidden rows. Let's paste in an example. Note that it includes the federal agency, the Department of Health and Human Services, the Bureau, or what we call the OPTIV, Health Resources and Services Administration, the President's Budget Account Title, Health Resources and Services, and Code, fairly useless information on an apportionment, if I must say, and the TAFs information. In this case, 75-0354/2017. Just as a refresher on the TAFs, note that the first two digits, 75, identifies the TAFs as a Department of Health and Human Services account. The next four digits identify it as the Health Resources Maternal and Child Health account. The last four digits indicate the fiscal year of availability, in this case, a single fiscal year, 2017. In order to get a better overview of the form, let's zoom out a bit and look at a more simplified version. This is a bit more truncated in order to get a look at the overall design of the form. The top portion represents the budgetary resources, or where the funds are coming from. The bottom portion represents the application of budgetary resources, or where the funds are to be spent. These amounts have to equal. If your application of resources does not equal the amount of resources available, you could easily be in violation of the Anti-Deficiency Act. So the form is designed with a built-in check to make sure they're equal. If they're different, you will be unable to validate the form, and without a validated form, it cannot be submitted to OMB. Looking at the horizontal structure of the form, the first column contains the line number. The line numbers provide a shorthand reference to each line on the form. You can find the definition of each line in Appendix F of OMB Circular A11. I will highlight most of the definitions you will come in contact with as we go through the line numbers shortly. A table in Appendix F shows how the line numbers are shown in each of four different documents: the SF-132, or apportionment, the SF-133, or report on budget execution, the Schedule P in the President's Budget Appendix, and the Statement of Budgetary Resources, or SBR. Note that the line numbers in the top portion of the SF-132 are four-digit numbers beginning with 1,000 that represent budgetary resources. These same numbers appear on the SF-133, Schedule P, and SBR. The line numbers on the bottom portion of the form are four-digit numbers beginning with 6,000. These line numbers are unique to the SF-132. There are no other reports that use 6,000 lines. In summary, apportionment lines for budgetary resources are in the 1,000s, and apportionment lines for the application of budgetary resources are in the 6,000s. Column 2 is the line split column. Let's take a look at Exhibit 120T in A11. OMB requires line split information in the following cases. First, the iteration number line split shows the number of times OMB has approved an apportionment for a given TAFs in a fiscal year. If you use the OMB system to create a request, the apportionment system automatically puts out the iteration number in the line split column, as well as puts the last approval date in the line stub column. Second, the reporting category line indicates whether the TAFs uses program reporting categories. These are basically non-binding information breakouts. Yes or no should be entered as appropriate. As a general rule, we do not use reporting categories in HHS, so HHS apportionments have a no in the line split column for reporting categories. This, of course, could change in the future. Third, the adjustment authority line indicates whether OMB has approved a footnote in the application of budgetary resources section on the apportionment, permitting special types of adjustments to be made without submitting a reapportionment request. Use yes or no as appropriate for the line split column. Since we frequently have OMB approved footnotes, you will probably use yes often. Fourth, line 1000. Line 1000 requires a line split for several potential reasons. This line is used to reflect unobligated balances brought forward in no-year and multi-year TAFs. For TAFs that are exclusively discretionary or mandatory, the line split is used to distinguish between estimated and actual balances. Line splits within E identify estimated balances, and line splits within A identify actual balances. In this example, there are two line 1000s, one with an A line split indicating an actual carryover amount of $410,000 in the agency request column, and one with an E line split indicating an estimated carryover amount of $1,180,000 in the previous approved column. This is the proper format for distinguishing estimated versus actual carryover amounts. For TAFs with unobligated balances brought forward in no-year or multi-year accounts that have both, that is, a mixture of mandatory and discretionary funding, you must use a line split that starts with the letter D to show the portion of the balances that is discretionary, and M to show the portion of the balances that is mandatory. Use DE or DA or ME or MA to indicate estimated from actual, discretionary, and mandatory balances. Here we can see the estimated and actual amounts for the discretionary portion of the carryover and the mandatory portion. In addition to these required line splits, you may optionally use the line splits to distinguish between two or more amounts that you would otherwise put on a single line. For example, you may use line splits like FDA does to distinguish between available and precluded unobligated balances, or to distinguish between two or more sources of appropriations. There are lots of options, but one note of caution. You can only use line number splits in the budgetary resources section, the 1000 lines. You cannot use the line number splits for the application of budgetary resources, the 6000 lines. Let's get back to our simplified SF-132. Column 3. Now we return to the Bureau/account title CATB stub line split column and focus on the stub or line descriptor functionality. This column provides a short text description of the line number from Appendix F in A11. This descriptor can be very helpful for those who have to enter transactions into the accounting system, since it provides information needed to select the proper transaction. For example, unobligated balance, appropriation, offsetting collection, and so on. Column 4, previous approved. This column is used to reflect amounts previously apportioned. Of course, it should be obvious that there would only be an entry in this column if there had been a previously approved apportionment in the same fiscal year. Data from a previous apportionment in a previous fiscal year would never appear in this column. That means that for initial apportionments, that is the first time you do an apportionment for a fiscal year, there will be nothing in this column. However, you should keep in mind that if there's a continuing resolution with an automatic apportionment, when it comes time to prepare what seems like the first apportionment, the automatic apportionment counts as the previous approved and should be reflected in this column. The next column is used to identify footnotes in the previous approved column. We'll discuss footnotes in Module 3. Next is the heart of the apportionment, the agency request column. This column reflects what you're asking OMB to approve. The OMB apportionment system automatically copies the amounts in the agency request column to the OMB action column. This saves OMB from having to enter the values in that column. In the majority of actions, OMB does approve the requested amount, so this is a big time saver for them. If they want to approve a different amount, they simply edit the amount that it's been entered by formula. This next column is used to identify footnotes in the agency request column. Next is the OMB action column. This column reflects OMB's action on the agency's request. If the request is properly justified, these amounts in the OMB action column will be the same as those in the agency request column. If there are changes from the agency request, these will usually occur in the application of budgetary resources section. It's rare that OMB changes amounts in the budgetary resources section. It's in the application of budgetary resources, part of the apportionment, that OMB exercises their Anti-Deficiency Act apportionment power discussed in Module 1. The amounts reflected in this column, when accompanied by an OMB signature, constitute an approved apportionment, fulfilling OMB's responsibilities under the law. This next column is used to identify footnotes in the OMB action column. The last column is the memo obligations column. This column is used to reflect actual obligations related to apportioned amounts in the OMB action column. You should enter your actual obligations, if any, in the appropriate time period or category line when you submit an apportionment request. Keep in mind that obligations in Category A should be entered as discrete amounts for each quarter, not cumulative amounts. Obviously, apportionments submitted prior to or just after the beginning of the fiscal year would not have an entry in this column. Use the most recent SF-133 report on budget execution to determine these amounts, or use your accounting system's most recent status of funds report. When you enter amounts, remember to enter the as of date in this column. This date should appear on the same line as the reporting category and be formatted as a date. Before we get to the lines, let's get a couple of nitpicky things out of the way by taking a quick look at sections 120.21 and 120.22 in Circular A11. Section 120.21 asks whether decimals or cents can be used in the apportionment. The answer is no. All amounts have to be rounded to the dollar. It is permissible to round cents up, but you will need to explain the rounding in a footnote, and you should take further care not to make the amount available to obligate in your accounting system. Section 120.22 provides the specific numeric format for entries in the numeric columns of the SF-132 Excel file. The numeric columns are the previous approved amount, agency request, OMB action, and memorandum obligations. Use whole numbers with no decimals. Numbers must be formatted using the thousands separator and with a leading negative sign. No asterisks, special characters, or letters should be used in the numeric columns, with one exception: the date format in the memorandum obligations column on the reporting category line. We've been looking at the overall structure of the SF-132, both vertically and horizontally. So now let's focus on the lines. There are around 130 possible lines on the form, but we'll focus on those you are most likely to come in contact with. I'll show you the basic structure, section by section, and the Appendix F definition of each line. As we noted earlier, the lines are divided into two major sections. A top section representing the budgetary resources, or where the funds are coming from, and a bottom section representing the application of budgetary resources, or where the funds are to be spent. We'll start with the budgetary resource lines, those lines in the 1000 series. The formal A11 definition of budgetary resources is amounts available to incur obligations in a given year. Note also that budgetary resources consist of new budget authority and unobligated balances of budget authority provided in previous years. The A11 definition of an unobligated balance is the cumulative amount of budget authority that remains available for obligation under law in unexpired accounts. Since you cannot apportion expired balances, that means you will only see unobligated balances on apportionments for multi-year or no-year accounts, and never on an annual account that by definition expires after 1 year of availability. Since they come first on the form, let's first focus on the lines for unobligated balances. Unobligated balances are made up of non-expenditure transfers, adjustments, and anticipated transfers and adjustments. What do we mean by a non-expenditure transfer? In this case, it's the shifting of unobligated balances in one apportioned account to another. This type of transfer does not involve paying for a good or service as an expenditure transfer does, hence the name, non-expenditure transfer. Any transfer of an unobligated balance must be explicitly authorized by law. Let's take a closer look at the lines in the apportionment that correspond to these headings. The first and only line under the unobligated balance heading is 1000. Unobligated balances brought forward. As A11 Appendix F describes this, the amount of unobligated balance of appropriations or other budgetary resources carried forward from the preceding year and available for obligation without new action by Congress. As stated previously, this line is used only in multi- and no-year accounts to reflect amounts carried forward from the previous year, and you would never see this line on an apportionment for an annual TAFs. Depending on the timing of the apportionment, this amount may be estimated or actual, discretionary or mandatory, and this is designated by the line splits discussed earlier. Under the non-expenditure transfers heading, there are 3 lines. 1010 is defined in Appendix F as the amount of any unexpired, unobligated balance of appropriations or spending authority from offsetting collections that is actually transferred from this account to other accounts. Since the line reflects amounts transferred out of your account, the amount would be negative. Line 1011 is defined as the amount of any unobligated balance of appropriations or spending authority from offsetting collections that is actually transferred to this account from other accounts. Since this line reflects amounts transferred into your account, it would be positive. Note, lines 1010 and 1011 are only used if you're preparing an apportionment after a transfer has already been made. Do not use these lines before a transfer has taken place. We'll discuss anticipated transfers when we get to line 1040. Line 1012. Unobligated balance transfers between expired and unexpired accounts. It's defined as the amount of expired unobligated balances actually transferred into this account as the result of authority to extend the period of availability of expired balances. For example, there are a few HHS programs that have the authority to keep grant funds available for an additional year if some states are unable to use their share of a formula. These funds are then redistributed to states that can use them. In these cases, unobligated balances are transferred from an expired annual account to an unexpired multi-year account. Since apportionments are only prepared for unexpired accounts, this line would only be used on a receiving multi-year or no-year account and would reflect only amounts actually transferred. Because it's a receiving account, the amount will be positive. The non-recurring expenses fund apportionment is probably the best example of an account that uses line 1012. Lines 1010, 1011, and 1012 make up the non-expenditure transfer section of unobligated balances. The next section involves adjustments. Recall that line 1000 reflects unobligated balances brought forward. Amounts reported on this line should always agree with the final SF-133 for the previous year and should therefore never be adjusted after the year closes. So, what happens if an error is discovered after the year closes? That's what line 1020 is for. It's defined as changes to unobligated balances that occurred in a prior fiscal year and that were not recorded in the unobligated balance as of October 1 of the current fiscal year. For example, if you discovered that a contract had been obligated, but it did not get into the accounting system before the books were closed, you would reflect a downward adjustment on line 1020, thereby reducing the unobligated balance brought forward by that obligated amount. If you thought something had been obligated but discovered after the end of the fiscal year that it had not, you would reflect an upward adjustment on line 1020. By recording all the adjustments on line 1020, you're providing a complete audit trail of activity. Line 1021 is used for reflecting the actual recovery of prior year obligations. The line is defined as the amount of cancellations or downward adjustments of obligations incurred in prior fiscal years that were not outlaid. You would only see entries on this line in accounts with multi-year or no-year authority. Entries on this line in these types of accounts occur quite often. After the fiscal year begins, it's frequently discovered that an obligation made in a prior year has been deobligated, that is, canceled, because the order was not filled or the work was not completed. When this occurs, these amounts are reflected on line 1021 and become an available budgetary resource. Like lines 1010 and 1011, line 1021 is only used if you're preparing an apportionment after a recovery has already been made. Do not use this line before a recovery has taken place. We'll discuss anticipated recoveries when we get to line 1041. Lines 1020 and 1021 make up the adjustments section. The next section reflects anticipated transfers and adjustments. Line 1040 is similar to lines 1010 and 1011, except that it's used to reflect anticipated rather than actual transfers. It's defined as the amount of the current estimate of any balances, other than balances of new budget authority, to be transferred to or from the account under existing legislation. Note that only one line is used, so it will include both anticipated transfers in and out in a net amount. Line 1041 is defined as the amount of the current estimate of additional recoveries of prior fiscal year obligations anticipated in unexpired accounts for the remainder of the fiscal year. Line 1041 is similar to line 1021, except that it's used to reflect anticipated rather than actual recoveries. So, lines 1040 and 1041 are used to park estimated amounts. In preparing initial apportionments, you will generally use these anticipated lines for transfers and recoveries. It's also important to remember that to the extent sufficient funds are apportioned as estimates, there is no need to reapportion to reflect actual amounts. In other words, as long as your actual transfers and recoveries are less than your estimates, you will not need to send OMB a revised apportionment. As the amounts are actualized, they are automatically reassigned to an actual status in the accounting system for reporting purposes. Keep in mind that if an amount exceeds an estimate, you may have to send a new apportionment to OMB to reflect it, unless the increase is covered by a footnote or the adjustment authority in section 120.49. We'll talk more about this in the next module. At the end of the fiscal year, all anticipated resources are zeroed out on the final SF-133, leaving only actual resources. Okay, so far we've been talking about the unobligated balances. Now we're ready to talk about new budget authority. New budget authority is broken into 4 separate components: appropriations, contract authority, borrowing authority, and spending authority from offsetting collections. All 4 of these are forms of budget authority. Appropriations are the most prevalent form of budget authority. Appropriations permit you to incur obligations and make outlays. Contract authority permits you to incur obligations in advance of an appropriation, offsetting collections or receipts that enable you to make outlays to liquidate the obligations. There are actually no examples of the use of contract authority in HHS. Borrowing authority permits you to incur obligations, and it authorizes you to borrow funds to liquidate the obligations. HHS has very little borrowing authority, and that we have is associated with loan and loan guarantee programs. The 4th form of budget authority is very common. It's spending authority from offsetting collections. It permits you to credit offsetting collections to an expenditure account, to incur obligations, and to make payments using the offsetting collections. Reimbursements fall into this category, as do user fees and so forth. We'll talk more about this later. Since we have so few examples of contract and borrowing authority, for our purposes here, we will concentrate on the appropriations and spending authority from offsetting collection forms of budget authority. We've covered the lines from 1000 through 1041, and now we're under new budget authority. The first section is appropriations. Let's look at those lines. The first thing we do with appropriations is divide them into discretionary and mandatory. The Balanced Budget and Emergency Deficit Control Act of 1985, affectionately known as BABEDCA, divides spending into 2 categories: discretionary and mandatory. This law requires that each type of spending be controlled by different statutory enforcement procedures. So this is an important distinction in the budget world, and that's why we see these separate lines for these on the apportionment. Discretionary budget authority is typically that provided by annual appropriations acts. There are exceptions, of course. HHS does receive some mandatory appropriations in annual appropriations acts, but these are the exception rather than the rule. With discretionary programs, Congress has discretion whether they will fund them or not. In contrast, mandatory spending, also referred to as direct spending, is budget authority and outlays typically provided by permanent laws. Let's cover discretionary appropriations first. You will note that discretionary appropriations are divided into a similar three basic subdivisions as unobligated balances: non-expenditure transfers, adjustments, and anticipated. The first line is probably the most frequently used line on an apportionment, line 1100. Discretionary appropriations. The amount appropriated from the general fund of the U.S. Treasury. This is the line where one would enter the amounts determined to be appropriated to discretionary Treasury appropriation fund symbols, or TAFs. Line 1120 is similar to line 1020 and reflects the amount of budget authority enacted for the fiscal year that is actually transferred from the account to other accounts under existing legislation that does not involve an obligation or an outlay. This lack of an obligation or outlay is what makes this a non-expenditure transfer. Line 1121 is similar to line 1021 and reflects the amount of budget authority enacted for the fiscal year that's actually transferred into this account from other accounts under existing legislation that does not involve an obligation or an outlay. For example, the Secretary has the authority to transfer up to 1% of any discretionary appropriation account to another, as long as the receiving account isn't increased by more than 3%. Such transfers would appear on one of these lines, depending on whether your account is the giver or the receiver. In the adjustments section, there are some differences from the unobligated balances. Line 1130 reflects the amount of permanent rescissions, reductions, and cancellations of new appropriations. This line is used only for enacted rescissions or sequestrations of current year appropriations. These might be across-the-board rescissions or account-specific rescissions. In contrast to line 1130, 1131 is the amount of permanent rescissions, reductions, and cancellations of unobligated balances of appropriations. You may wonder why this line isn't in the unobligated balances section. Well, the reason OMB puts the line in the discretionary appropriations section and not the unobligated balances section has to do with the way the rescission of unobligated balances is scored. By rescinding unobligated balances appropriated in a previous fiscal year, Congress gets scored with a credit, and this credit offsets the appropriation of new budget authority in the current year. From a budget presentation perspective, and since these same lines are used in Schedule P in the President's budget, if you want the credit to offset the appropriation, you need to include this line in the same section. Line 1134, Appropriations Precluded from Obligation, is primarily used to identify appropriations provided by a part-year continuing resolution. The instructions say to include, as a negative amount, the portion of the annualized level included on lines 1100 that is not available for obligation under the terms of the continuing resolution. For example, if a CR is for only 1 quarter, then the approximately 75% that's not available would appear on line 1134 as a negative amount. This is the appropriate way to represent the annualized amount and the amount available under the CR on an apportionment. Line 1150 is used to reflect the amount of indefinite appropriations anticipated to become available under existing law for the remainder of the fiscal year. You won't see this line used very much. There is only one HHS account that has discretionary indefinite appropriations. The HHS accrual contribution to the Uniformed Services Retiree Health Fund. Line 1151 identifies the current estimate of appropriations anticipated to be transferred to this account, net of appropriations to be transferred from this account under existing legislation. This line is very similar to line 1040, except that it reflects new authority rather than unobligated balances. Just as with the estimated transfers of unobligated balances, in preparing initial apportionments, you will generally use this anticipated line for transfers. As long as your actual transfers are less than your estimates, you will not need to send OMB a revised apportionment. But if an amount exceeds an estimate, you may have to send a new apportionment to OMB to reflect it, unless the increase is covered by a footnote or the adjustment authority in section 120.49. As discussed previously, we'll talk more about this in the next module. Now let's move to the mandatory section of the appropriations. Note that we have the same categories in the mandatory lines as we did in the discretionary lines: non-expenditure transfers, adjustments, anticipated appropriations. But there is one additional category: advance appropriations. As stated previously, mandatory appropriations are, generally speaking, provided in permanent law. HHS has some exceptions that are provided in annual appropriations acts, however, like Medicaid, child support enforcement, and foster care, for example. Just as we have line 1100 for discretionary appropriations, line 1200 is for mandatory appropriations. In fact, Appendix F is structured in such a way as to define the discretionary and mandatory lines, where appropriate, using the same definition. So, it should come as no surprise to see that line 1200 has the same amount appropriated from the general fund as line 1100. Since our special and trust fund accounts are mandatory, they get their own line on the apportionment, line 1201. Amount appropriated from special or trust fund receipts. You'll see this line used most frequently on special fund apportionments. Line 1203 is also used only for special and non-revolving trust funds to reflect amounts that were previously reported as sequestered on line 1232 in a prior fiscal year that becomes available for obligation in a subsequent fiscal year. Because amounts on these lines are only temporarily withheld and returned in the subsequent year, they're referred to as pop-ups. A scan of FY 2017 apportionments reflected use of these lines only in CMS accounts, High and Smart Trust Fund, the Child Enrollment Contingency Special Fund, the Risk Adjustment Program Payments, and the Transitional Reinsurance Program Special Funds. Line 1204 is for mandatory reappropriations. These are defined as the amount of new budget authority resulting from legislation that extends the availability of funds that have expired or would otherwise expire. Because such extensions of availability are counted as new budget authority in the first year of the extended availability, the use of this line is very rare. In fact, the line was not used at all during 2017 in HHS accounts. So, why even bring it up? Primarily, I want to draw a contrast between the use of this line and line 1012, transfers between expired and unexpired accounts. Recall that line 1012 is used when authority exists prior to the transfer to transfer expired balances to an unexpired account, thus avoiding a scoring hit. These types of transfers are referred to as balance transfers to distinguish them from reappropriations. And since they do not count as new appropriations, it's preferable to do a balance transfer as opposed to a reappropriation. Transfers from accounts with expiring balances to the non-recurring expenses fund are classified as balance transfers and would appear on line 1012. Lines 1220 and 1221 are the mandatory equivalent of lines 1120 and 1121 in the discretionary section. The definitions are the same. For 1220, it's the amount of budget authority enacted for the fiscal year that is actually transferred from the account to other accounts. And for line 1221, the amount of budget authority enacted for the fiscal year that is actually transferred into this account from other accounts. In the adjustment section, line 1230 is the amount of permanent rescissions, reductions, and cancellations of both new appropriations and unobligated balances of appropriations. You may recall that in the discretionary section there are two separate lines for these rescissions, 1130 for new authority and 1131 for unobligated balances. That's because scoring rules for discretionary rescissions are different from mandatory rescissions. Line 1232 is defined as the amount of temporary rescissions, reductions, and cancellations of new appropriations and unobligated balances of appropriations. As discussed previously, this line is used in tandem with line 1203 only in a few sequestered CMS Special and Trust Fund appropriations. Line 1234, amounts precluded from obligation, is used the same way line 1134 is used in the discretionary section. That is, to identify the portion of the annualized level included on line 1200 that is not available for obligation under the terms of the continuing resolution. For some reason, the current A11, as of the creation of this video, omits line 1200 from its descriptive text. Of course, since CRs apply only to annual appropriations acts, and only a few accounts receive mandatory appropriations in annual appropriations acts, Medicaid, payments to healthcare trust funds, child support enforcement, safe and stable families, social services block grant, foster care, and retired pay, most optives won't need to use this line on their apportionments. Line 1250, anticipated mandatory appropriation, is defined as the amount of indefinite appropriations anticipated to become available under existing law for the remainder of the fiscal year. You would use this line for appropriations that have such sums language. For example, Medicaid, child support enforcement, and foster care all have such sums as may be necessary language that permits making payments after May 31st for unanticipated costs incurred for the current fiscal year. An apportionment prepared for one of these accounts would use line 1250 to reflect the estimate of such an amount if they were needed. Once this amount is approved in an apportionment and a Treasury warrant is issued, any subsequent reapportionments would reflect the amount on line 1200. Like line 1151, line 1251 is defined as the current estimate of appropriations anticipated to be transferred to this account, net of appropriations to be transferred from this account under existing legislation. Just as with the discretionary line 1151, amounts anticipated to be transferred on this line become available once the actual transfer is accomplished without further apportionment action. If a subsequent reapportionment is done, then the amounts actually transferred can be reflected on the appropriate actual transfer line, 1220 or 1221. Line 1270 is for mandatory advance appropriations and is defined as amounts provided in appropriation acts that become available for obligation one fiscal year or more beyond the fiscal year for which the legislation is enacted. Only Medicaid, child support enforcement, and foster care have advance appropriations. So these are the only accounts in HHS that would use this line. These advance appropriations exist in order to permit mandatory payments scheduled by law to go out on October 1 for the first quarter of a fiscal year, even under a continuing resolution. So do not use this line for permanent appropriations. That's the end of the appropriations portion of the new budgetary resources. Now let's move to the spending authority from offsetting collections section. Recall that spending authority from offsetting collections permits you to credit offsetting collections to an expenditure account, incur obligations, and make payments using the offsetting collections. For example, user fees, PHS evaluation funds, Economy Act reimbursable agreements, Stafford Act tasks, and so forth, all require some sort of statutory authority for you to collect the funds into your account and spend them. Spending authority from offsetting collections from other federal agencies becomes budget authority once an agreement is signed and the ordering agency obligates the funds. Spending authority from offsetting collections from non-federal sources, like the public, does not become budget authority until collected. Just like the appropriation, spending authority from offsetting collections is also divided into discretionary lines and mandatory lines. We'll cover discretionary first. The first line in this series is 1700, collected spending authority. This is defined as offsetting collections credited to expenditure accounts by law. This is the amount of your discretionary spending authority from offsetting collections that has been actually collected. Line 1701 is change in uncollected payments, federal sources. This could be the amount of reimbursements from another federal government account that is earned but not collected, or it may represent a trust fund transfer that's authorized by law but that has not been made yet. Either way, this is the amount of discretionary collections that are owed to you by another federal agency because you've done some work but you haven't collected, or by a trust fund that's providing a transfer under law. In the accounting world, these are known as receivables. CMS's program management and the Office of Medicare Hearings and Appeals, which are primarily financed by trust fund transfers from the hospital insurance and supplementary medical insurance trust funds, use line 1701 to reflect amounts authorized for transfer in the Annual Appropriations Act. In these cases, the law appropriating the funds establishes the receivable from the trust funds, and such amounts do not have to be anticipated. This federal sources designation is important because the federal government recognizes receivables from federal agencies as a budgetary resource. You can add a resource owed to you from a federal source to your budgetary resources and spend it. However, collections from non-federal sources are not available until actually collected. Line 1702, offsetting collections previously unavailable, identifies collections from the previous year that didn't become available until the current year. The only discretionary account in HHS that uses this line is FDA because they collect user fees for a fiscal year in the fourth quarter of the previous fiscal year. These amounts, which are initially recorded as unavailable, carry over and then pop up after the fiscal year begins on line 1702. The last line in the discretionary spending authority section we're going to cover is 1740, anticipated collections, reimbursements, and other income. This is defined as the current estimate of anticipated collections, for example, anticipated orders from federal sources or anticipated refunds, expected for the remainder of the year. At the beginning of the fiscal year, anticipated collections would appear on line 1740. As the year progresses and collections are earned, accounting entries would change the status from anticipated to receivable and finally to collected. Although you do not have to reapportion to reflect receivables in collections, if you need to prepare a reapportionment for some other reason, you should reflect the appropriate status of your collections at the time of preparation. Since line 1740 is reduced as amounts become receivable, and since receivables are reduced when they're collected, at any given time the sum of lines 1700, 1701, and 1740 should equal total collections for the account for the year. At year end, line 1740 is reduced to 0. Now, let's take a look at mandatory collections. The lines in the mandatory section are, with one exception, virtually identical to the discretionary lines. Line 1800 is collected spending authority, the amount of your mandatory spending authority from offsetting collections that's been actually collected. Line 1801, change in uncollected payments, federal sources, is the amount of reimbursements from another federal government account that's earned but not collected, or authorized trust fund transfers that have not been made. We refer to these as receivables. Line 1802, offsetting collections previously unavailable, operates a little differently on mandatory apportionments. It still reflects the pop-up of resources previously unavailable, but in this case the amounts were temporarily reduced due to a sequester. If we use line 1802 to reflect a pop-up, you can expect an entry on line 1823, new and or unobligated balance of spending authority from offsetting collections, temporarily reduced, to reflect the amount temporarily withheld due to a sequester. Many HHS accounts have to use this pair of lines to reflect sequestered amounts. Finally, the last line in the mandatory spending authority we're going to cover is 1840. Anticipated collections, reimbursements, and other income. Just as with line 1740, this is defined as the current estimate of anticipated collections. For example, anticipated orders from federal sources or anticipated refunds expected for the remainder of the year. Like line 1740, at year end, line 1840 is reduced to 0. We've now covered the top of the apportionment, that is, the budgetary resources section of the SF-132. We've discussed unobligated balances and new budget authority. New budget authority has been broken down into two major types: appropriations and spending authority from offsetting collections. And each of these has been subdivided into discretionary and mandatory. All of these budgetary resources are summarized on line 1920 of the apportionment, total budgetary resources. Now that we know how much money we have to spend, let's move to the bottom section of the apportionment form, the application of budgetary resources. Let's focus on this section. There are two major divisions of the application of budgetary resources section: apportioned and unapportioned. Let's discuss apportioned part first. The apportioned section is divided into 4 separate sections: Category A, Category B, Category AB, and Category C. Lines 6001 through 6004 comprise the Category A portion of the apportioned budgetary resources. These lines reflect amounts requested to be apportioned for each calendar quarter in the fiscal year. You may recall from Module 1 that OMB is charged with ensuring agencies do not run out of money. Category A is used to fulfill this responsibility. OMB allocates the funding by time for such things as salaries and expenses that need to last for a full year. Because of this, you'll usually see salaries and expenses funding apportioned in Category A. In order to properly control amounts by quarter, federal agencies' accounting systems allocate funds, distinguishing between current and subsequent periods. Only funds allocated as current are available for obligation. Note also, as mentioned in Module 1, that apportionments previously approved are not subject to change after the close of the period for which the apportionment is made. Note in this Exhibit 120K that the cumulative amount apportioned through the second quarter is less than the cumulative amount previously apportioned through the end of the first quarter. Since you cannot change an amount after the period is ended, note that the amount apportioned for the current period is revised to a negative amount. The Category B section, made up of lines 6011 through 6110, apportions on a basis other than calendar quarters, such as time periods other than quarters, something I've never seen, activities, projects, objects, or a combination. Major grant programs are frequently apportioned as Category B lines. It's important to understand that each Category B line is a separate apportionment control. Category AB, composed of lines 6111 through 6159, is a relatively new section which gives OMB a great deal more control by apportioning by a combination of fiscal quarters and projects. A search of 2017 HHS apportionments did not turn up any use of Category AB. Category C, made up of lines 6170 through 6173, is an interesting one. It's only used in no-year and multi-year accounts when there are funds in excess of current year needs. This category was created by OMB to reflect apportionment of funds in no-year or multi-year accounts that will not be used until a subsequent fiscal year. Amounts planned for obligation after the current fiscal year are shown on lines 6170, 6171, and so on, although it is rare that funds are apportioned for more than 1 year into the future. Although Category C is technically in the apportioned section of the SF-132, it's important that these funds be reflected in the accounting system as subsequent quarter to prevent them from inadvertently being obligated. Okay. Categories A, B, AB, and C complete the apportioned section of the SF-132. Now let's talk about the unapportioned section of the application of budgetary resources. The first two lines are related. Line 6180, withheld pending rescission, and line 6181 is deferred. Appendix F instructions refer us to section 112.3 in the Deferrals and Presidential Proposals to Rescind or Cancel Funds section of A11. I call this the cobweb section of A11 since this particular section has rarely been used since the latter Bush administration, even though the Impoundment Control Act of 1974 has never been repealed. But for the first time in 20 years, line 6180 was used in FY 2018 to withhold funds for 45 days while Congress considered proposed rescissions from the President sent over in a special message. Line 6181, the deferred line, was once used to report amounts that were delayed or deferred from spending, again as reported by the President in a special message. However, now that Category C has been added to the apportionment, amounts can be reflected there, having the same effect as a proposed deferral without having to notify Congress. The next line in the unapportioned section is 6182. Unapportioned balance of revolving fund. As noted, this line is used primarily for public enterprise funds, intragovernmental revolving funds, and trust funds subject to apportionment. These are amounts that have been collected in business-type operations that are not needed for the current year. These may include retained earnings, reserves to replace equipment, or fund annual leave, and so forth. Since there are only a few revolving funds in HHS, there are only a few apportionments eligible to use this line. Examples of revolving funds that could use this line are the HHS Service and Supply Fund, the NIH Service and Supply Fund, the FDA Revolving Fund for Certification, and the CDC Working Capital Fund. Finally, there is an exempt from apportionment line, 6183. Note that this line is only for accounts that have both apportioned and exempt from apportionment amounts. As you might have guessed, this line is rarely used. The only time I can recall seeing this line was used on the gift fund apportionment for SAMHSA and NIH when they received payments from the BP oil spill fund in 2011. Because gift funds are normally exempt and only wanted to apportion the BP payments, the total resources of the gift funds were reflected in the Budgetary Resources section of the SF-132. In this example, SAMHSA. The BP oil spill funds were apportioned in Category B, and the rest of the gift funds were on the exempt line. The apportioned section, lines 6001 to 6173, plus the unapportioned section, line 6180 to 6183, make up the entire application of budgetary resources, or bottom section of the apportionment. These lines are totaled on line 6190, and this amount must equal the amount on line 1920. This is the end of Module 2. You should have an understanding of the overall structure of the SF-132, or apportionment schedule, and you should be able to identify most of the appropriate lines to use in preparing an apportionment. I strongly encourage you to familiarize yourself with the relevant sections of OMB Circular A11, especially Section 120 and Appendix F. In Module 3, we'll discuss the rest of the apportionment. This includes footnotes and other documentation in support of the request. Thanks for listening. Next up, Module 3.